big hello and a very warm welcome to Brand Equity with me, Sonali Krishna. I'm today at the Marico headquarters in Mumbai and going to be in conversation with the man who's actually got the streets very happy. He's an exception amongst hordes of FMCG companies that let the markets down. It's none other than Saugata Gupta. Thank you so much, Saugata. Truly a pleasure to finally be doing this. And first off, many congratulations on your results compared to everybody else who's seeing a massive consumption dip. You've managed to somehow balance your portfolio and keep the markets happy.
Thanks for having me here. I think I would say that what worked been well for us in the last couple of years is around 2020 we started the diversification journey where we realized that obviously the headroom for growth in the core is not necessarily going to be double-digit revenue growth, and that's when we started a diversification journey. And both food and the digital brands are the unique model of being a strategic investors and then integrating them in 3 years and learning has worked well. I think we have been also resilient in the international business. It's been delivering double-digit constant currency growth for a huge number of quarters. So both of this has helped. Obviously, the core business is still a little stressed,
yes,
and that's the case with most of the FMCG companies.
Absolutely. Yeah, so I want to do a deep dive because Marico as an exception is kind of future-proofing themselves in terms of their investments and also all your acquisitions for your DTC play also seems to be growing steadily, and I think a lot of other FMCG behemoths are now following suit, but you've done it much earlier. Now you said 2020 is when you decided that you need that transformation, but 2020 was also a year of extreme mayhem, chaos, and one didn't know what was happening. How is it that at that point in time when people were kind of struggling to get supply chain and figuring out how life will be in the COVID era, that you thought that was the right time to kind of look at a transformation?
So I think two things. One was that if you look at pre-COVID, again, the sector was not doing that great. I think we did when we did a minority stake in Beardo, that was 2017, and
right.
2020 we actually did the majority buyout, and that was at the peak of COVID. In fact, during that April, June, during the lockdown period. Right. I think the idea on foods came during the COVID lockdown. Actually, we started with honey, we aggressively expanded, and I think food opportunity came during. And if you really look at between 20 and 22, whether it's immunity or anything to do with health and healthy foods, that went really well. I think that was a time when e-commerce started growing, and sure, this was a time we looked at some other companies. We looked at Just Herbs first, then we looked at, I think, True Elements was sometime in 2022, and then we did Plix in 23. And I think one of the things that helped us clearly is that we realized that, to be very honest, we don't know how to run a digital business on our own. So therefore, we didn't go with that 100% acquisition. We took 3 years to integrate, and that was a time for learning. We also kept them, away from the Marico ecosystem because, the operating model was completely different. Sure. As far as foods is concerned, I think there's a realization that Saffola was an extremely under-leveraged brand. It stood for earlier heart health and, it's better for you. And therefore, we started oats again. Our initial foray, we had dabbled with a lot of things for the sufferer, but they were niche. We realized if you have to really scale up on foods, you have to do family, you have to do taste. And in India, one thing is that consumers are unwilling to compromise on taste for health. And therefore, we started plain oats, but we said that maybe the scalability is not high. How do you Indianize it? How do you move it from a breakfast to in-between meals? Mm-hmm. And then the journey started. We first did honey, we did soya, and now we are doing snacking, we are doing breakfast, we have just launched muesli. So I think food, if you look at food, penetration of foods is far lower and there's a huge unorganized to organized, and with a home cooked food, yes, you compete with also, in the sense that you compete with a home delivery of food today, which is very, very convenient. But I think there is enough opportunity for better for you because people are looking for health and well-being.
Sure.
Plix, of course, was another interesting option because we believe post-COVID, nutraceuticals is going to be a big market, and Plix, incidentally, drives a lot of these. It started with ACD, but which is on weight management or helps manage weight, and there are a lot of other platforms it can choose. And therefore, we now have a reasonably holistic digital portfolio. We started selling Kaya some couple of months ago, because Kaya used to be sold in clinics by our, it is the same group company in some way. But we believe that, again, it was under leverage. So we have a broad bouquet of digital companies, but there's still to be done. And of course, food, there's a huge runway.
Sure. I want to get into the D2C play in detail, but I just want to first stick with the traditional business, the FMCG business. And from an industry level, most heads of companies now and most managements are stating that they find that the outlook for the new year is much better because of the new, kind of more money coming into the pockets of Indians thanks to the finance minister and this budget and, the revision of the tax slabs. While that is true, do you actually think that, Indians are going to start spending again? There is a very palpable dip in consumption because of the lack of revenue, lack of money that they're getting in their hands from the different companies, from wage workers to the middle class to whatever, leaving the top of the pyramid aside for a minute. Whichever strata you're looking at, whichever class you belong to, everybody's seeing that kind of pinch, and you're seeing that that there is a fear. Now, if everybody is saying that no, we see that with more money coming in, people will start spending more, you also see now, because the stock market is kind of reacting suddenly in a bear run, people are getting even more jittery in terms of what's going to happen. So do you really see a kind of a correction from a macro level in terms of consumer sentiment?
So I'll break it down into two things. I think as far as rural is concerned, the factors driving consumption are different.
Sure.
You have to look at monsoon, you have to look at minimum support prices, and how the agricultural productivity is panning, and people, how are some of the cash crops doing. And I think things are much better. And also, as you know, in the last 10 years, the direct benefit transfer, there's far less leakage. So I think rural, we see, the revival of consumption happening. Okay. As far as urban is concerned, obviously there are two factors. One is inflation. Whenever there is high food inflation, especially, what happens? People either titrate FMCG because the expenses on food increases, and therefore the share of wallet available for FMCG reduces. Okay, so therefore people titrate or downgrade. And what exactly happened also, you must realize, to the sector, which doesn't necessarily always get captured in retail audit, is at the top end, D2C brands are somewhere eating away some share. At the bottom of pyramid, during COVID, a lot of these small players went out of business because of supply chain working capital reasons. Now they have come back, and they come back when there's high inflation, because that's the time people titrate or they downgrade.
Sure.
So therefore, these two, they don't get really captured, and they have been eating into the overall organized players. Okay?
I see.
So it's not that sometimes consumption has gone down, but both the sides, people are eating out. And if you add sometimes the Nielsen numbers, and if you add the listed company numbers, there is always a gap sometimes.
Sure.
Okay.
Got it.
Secondly, so once food inflation eases,
but
yes,
when is that happening? Anytime?
It's eased out a bit. But I think the issue is overall food inflation is in a better state than it was, say, when post-Ukraine happened. There was a huge this one. Obviously, last year again there was a slight dip that happened. Sometimes in certain categories like edible oil, there was a duty increase, but that was to protect Indian farmers. There was a slight increase. Broadly, it's in control.
Okay.
As far as the tax is concerned, I think it gives definitely a better sentiment. Now, whether it's going to come into staples, my thing is it will come into maybe food, packaged food. It will come into beauty and personal care. It might stop the downgradation from happening.
Okay.
It might not directly come into higher staple consumption because they are high penetration category, but certainly it will help some part of the FMCG business. It will definitely help. People might spend more on QSR, might spend on travel. So part of it will come into FMCG, but it will certainly give you a much more positive sentiment towards spending. Now, yes, I think real wages have to also increase, but that's one of the factors. But but if I look into all the factors, I think the worst as far as urban consumption is concerned is over. And also we are cycling a lower base. So next year will be better. Now, is it going to be massively better? The answer is right now, we don't know.
Sure.
But certainly it will be slightly better than what it has been, especially in the last 2-3 quarters.
Fair enough. When you talk about, let's say, your entire portfolio, I know the Saffola story has been a great story, from edible oil to now foods, and you've stated, I think now what, it's about what 26-30% your foods?
No, I think the entire digital plus food.
No, just Saffola.
No, Saffola. No. It's within the Saffola franchise. It is, yeah. It's actually more than that now, right?
More than that. Yeah. So over 30% is just foods, right? And you're hoping that split will change over time, and it may become 50-50, and then go on to become mostly dominated by food, right? My question is, what is the Parachute story, which is an equally strong brand and a legacy brand for most Indians? From oil, you've kind of got into different, I would say, heated oil and some other products. But is there a diversification plan for Parachute?
Right now, no. I think food is something we want to really grow the business.
Okay.
I think there is enough opportunity. Also, some of the newer categories like serums, male grooming, and of course, I think if I look at personal care, much will be driven through the digital brands and premiumization, and that is where I believe there's a huge opportunity. And if you look at a lot of legacy, CPG companies globally, not many have been able to seamlessly convert itself into a consumer digital company. And that is why they have lost opportunity for growth. For us, the vision is to how do I quickly convert ourselves into a consumer digital company and let both the models coexist, and that they coexist comfortably.
I have a question for you. You are yourself, an MBA grad from one of the top schools in India. We've seen people like you and your peers kind of lead large FMCG companies which require scale. They have a different mindset. And now you're seeing these new companies, you've acquired a few, but my question is, when you do a deep dive into a D2C, a totally digital brand, how sound are their fundamentals? Because the kind of R&D and the change that, say, a company like yours or in your ilk has to do takes time. MR takes time, actual kind of test piloting takes time, and then you launch a product. Here you launch it, you can take it back, you're very agile. So how fundamental is it from, you would be the best person to answer it. Their business model, so to speak.
So I think, we like businesses, and in fact, we cherry pick businesses which are built to last rather than built to sell.
Correct.
And built to sell so I think there are two phases in any D2C company, okay? The first is what I call the innovator phase, and the second is the scaler phase. And there are two different capabilities. But you definitely need to have a solid business model for it to scale well. Now, if I look at the starting phase, I think all the successful D2C companies, they cater to an unmet need. They are very agile in ability to do consumer insighting or spotting a trend, and I keep on saying that perhaps, the onion hair oil was spotted by somebody else rather than us. But we are now today perhaps doing onion hair oil in a lot of countries in the world and doing well. But we have been slightly slow follower in India, perhaps fast follower in other markets. But we have picked on something else. For example, rosemary is another trend, and we are doing well. The second, so their ability to do high velocity innovation, which is about, it's far better than this one. But I think they are very good in digital marketing. But when it comes to scaling up, you also require talent, you require processes, and you require access to go to market. And the scaler phase, an entrepreneurial FMCG large-scale company, which is far more entrepreneurial, agile, perhaps could be better scalers. And I'll give you an example. If I have 4 or 5 companies in my portfolio, my ability to manage costs, share resources will be far higher than a standalone company.
Sure.
And I have a strong opinion that what it takes to do a 0 to 100, 100 to 500, and 500 to 1000 and beyond are different capabilities and different sets of talent that's required and processes that are required. So yes, they are very good, best in the world, maybe to do 0 to 100. Some continue to be good to do 100 to 500, 500 and beyond journey very few will be doing it. And therefore, I think it makes sense that actually to understand what are the things required for scalers, and not all innovators are very good scalers. And there's also a difference, if I look at FMCG versus any other, say a fintech, or suppose what we have, the Zomatos or the Home Day, they have disrupted the entire industry.
Right.
And therefore they have the entire total addressable market available.
Absolutely.
For D2C players in FMCG, actually GT is not available. GT is a completely different capability. Their business model can't handle GT. Their business model can't handle brick and mortar. So the reason the tech or a founder-led startup CPG companies can't scale up, because the capabilities required to scale up is very different from any other industry.
I ask you this question in particular because, you're right, they might be very good at trend spotting. But the point is, isn't that the problem, that it's just a trend? So is that trend sustainable? Is that trend like a parachute oil or a Saffola oil, or even let's say now Saffola oats? You are looking to make this a habit, right? All of us have used parachute oil and continue to do so. Some may upgrade or whatever, but broadly it is everybody has a touch and feel. These are legacy brands. I'm saying which D2C brand, let's say it's of course it's new as a concept, but which D2C brand has actually, you've seen, built their brand so well that today they have made it very big?
I think some have. I'll tell you that, and the reason is, I think first, they have catered to an unmet need.
What's the unmet need?
So it could be anything. I mean, look at a lot of times it could be an unbranded to branded. Like let's take the case of ID, which is based on convenience, something which you build, or this one.
Yeah.
A brand like a Raw Pressery, which started off again fresh. So there is always an unmet need. The question is that, so in a lot of cases when they are not doing a category creation, but doing an unmet need, it's easier. When you do a category creation, it is a slightly long gestation period. But you are right, if I just pick on a trend which is not backed up by either efficacy, product quality, then it becomes a fad. I think you have to actually, so therefore even they need to invest behind not only just brand building, they need to continue to listen to consumers, and they are actually sometimes better than that, because they deal with a lot of influencers that directly, because of the D2C, they can hear from the consumers much better than large scale companies. They are agile in picking up a trend. See, sometimes, for example, if you look at it, some of the successful digital brands today have a certain business model which have been already successful in the Western world or in North Asia.
It's a copy-paste model.
It's a broad, I would say, in terms of they have learned, because a trend comes from there. For example, if I look at it, a K-beauty or a J-beauty trend might go to Southeast Asia, come to India. A food habit from the West can come to India. So these are trends. I think what they are exactly doing is then able to spot a trend, bring it, leverage, and develop a trend. Having said that, I think some of them have been very good in terms of continuing to do this in a cyclical kind of a way, and that becomes a repeatable model of doing it. Now, obviously, you need to invest behind creating a great product. You need to invest behind packaging, you need to invest behind consumer experience, listening consumers. So as I said, that some will do it. Now, not all will be able to do it, some will do it, but I think, would I see some 20,000 crore brands? The answer is no at this stage.
Right. I only asked you this because I heard you say in a conversation with someone else where you said that, that the models are different, the traditional model is different. With your with DTC players, right, they are high innovators. You said the risk is bite-sized compared to, let's say, taking a risk in a traditional setup. You said the mindset is different, and you also said the talent is different. When I heard that, A, I wanted to ask you how different, and B, they almost sound like a very, very entitled lot who are allowed to make mistakes, play with money, and it doesn't matter, versus, let's say, a traditional setup that works hard, does much more deeper research, works harder for their advertising, and have repercussions if something goes wrong, right? As opposed to saying that for most of these new age companies, that you have a long rope, and if you innovate and you make a mistake, it's okay because it's not their money.
No, I think if you ask me, there is no reason why a traditional CPG company can adopt that model. Okay.
Okay.
They can adopt that model. The thing is that it can't coexist. It has to be segregated. So we call it engine 1 and engine 2. Now, if I look at it, the design of that model actually is suitable for doing these multiple risks, small risks.
My question to you is, Saugata, in your own training, right? In your own training of FMCG, it doesn't say you experiment for the sake of experimenting, right? There is a deep dive that you do in any category, any product, which these D2C players don't seem to do. It's a trend, they catch it, you pull it out, it doesn't work, you pull it off.
No, but see, in today's world, the consumer, you should do it. I think, as I said, that ultimately it's about thinking big, starting small, and either scaling up fast or failing fast. Now, the problem is that if you look at the traditional FMCG companies, we are designed to do scale,
sure,
a repeatable model of scale based on efficiency, mass distribution. Okay. Now, it is very difficult. It's not for one company to coexist with two different models, because you can be keeping. So what we are doing is we are improving efficiency and becoming best in the world at that. The second thing is, obviously any founder may be having a much more risk appetite sometimes than a professional manager.
Yes.
Number 3 is, when you are listed versus when you are unlisted, your risk appetite is different, because you don't have to answer every quarter. Yes, to acquire capital you have to do it. But having said that, even there, I believe, as I said, that founders who build to last, they don't do spray and pray. So they have a definitive, I think they focus. Yes, they keep on learning. There's an iterative learning. But if you look at some of the brands which have scaled up, they're solid brands. And I think I must say that just they have to learn from us. We need to learn from them. I think that's the way.
How is it for you to kind of don your, FMCG hat when you are looking at engine 1, and then suddenly wearing the new age hat when you're looking at engine 2? So you're kind of, rewiring yourself to look at both these engines. How hard has it been for you?
I think one of the things we believe has helped us is, I would say by and large, the Marico management has a lot of humility and learning agility. And when you have less, if I call it less intellectual arrogance and humility and willingness to learn, I think it is easy. One of the things we did, I think it was in 2018 or 19, I said that if you have to be successful in the new digital world, the top management will have to be digitally savvy. So we did this program called Bottoms Up, which is basically we picked up amongst the managers, and these are fresh youngsters who are the most digitally savvy, and started attaching them to one of me and my team. In fact, I had also a mentor, which is called reverse mentoring,
sure,
to how do you make yourself digitally savvy.
Got it, yeah.
Okay. The second thing is, by not buying it 100%, but the first Beardo was actually a minority stake. We just silently learned the business from them. So respecting the founders, saying that, okay, this is how you learn. We then start prescribing that, listen, I am a X billion dollars market cap, you don't know anything, I do something. But I think that culturally, see, if you look at historically, Marico stands out for empowering people. We are a reasonably, company with high learning agility. We are a extremely transparent culture. So culturally, we are used to not being control freaks, and that actually helped. And I think today, if you ask me, I think we are fairly there in line to manage a consumer, digital company. Can we start from scratch? The answer is still no, because I think we are very good, profitable, sustainable scalers. We are still not the best in innovators and ideas, okay? And I'm being honest about it. So can I start 4 or 5 digital brands? Maybe I will do better than some of the others, but I will never be perfect. But this model works out well. I might not be the best creator, but we want to be the best scaler.
Got it. So if I just look at the kind of portfolio you've definitely got, you've got male grooming, you've got makeup with Just Herbs, you've got Plix, and
True Elements.
And True Elements, which is the high-end, food products.
And we have Kaya.
Kaya, of course. Let me get to Kaya. Now, Kaya is quite an established name, but of course, as you yourself said, has been understated. What is the plan to kind of revive it? Because this whole Ayurveda, yoga, Indianization, all coming back in vogue, not internationally and in India. So it's actually a good opportunity to revive that brand.
No. So Kaya, the reason it was underleveraged because it was sold in clinics, the products essentially.
Yeah.
And it's a science-based, it's a very, very strong brand with a strong equity. I think, so therefore it will continue on that trend, which is science-based skincare. But Kaya definitely understands Indian skin more than some of the Western brands.
Sure.
And therefore we believe that what we are essentially doing is giving an option for a lot of Kaya consumers who essentially used to go to Kaya outlets and also get used to some of the Kaya products, an option to buy. The brand saliency is reasonably high in cities where there are critical mass of Kaya clinics.
Absolutely.
And therefore it's a TAM expansion and making the brand a little more approachable and available to a larger set of consumers who may have not gone to a Kaya clinic.
So it will be available now in the retail market. I can buy a Kaya product without going to the clinic.
That's right.
Right? Okay, fair enough. So, but I do know you are very invested in the growing of the DTC brands inside the Marico stable. So I know one stated ambition of yours is to look at wellness very seriously because that's a growing trend. But apart from wellness, and in wellness, what do you mean by wellness? It's quite a large category.
Yes, so if I look at wellness, I think it is a very broad spectrum. Today, and a lot of people do weight management, we do heart health through Saffola. I think there could be things, diabetes is a big thing in India, okay. There is today bone health, gut health, sleep, stress. So therefore there is a huge spectrum of wellness to actually cover. And if you really look at it, slowly we see, given our stressful lives, given the pollution in cities, given the traffic, given all the, kind of adversities people have, because of the uncertainties.
Sure.
I think these wellness will be a big thing. See, I think COVID was a wake-up call for a lot of people because, if you had a condition, you were much more prone compared to this one.
But do you really think that the fears and our trends that we kind of pursued during our COVID years, do you think that's still relevant or people have forgotten?
No, people might have forgotten, but I think there is a far more two things. People want to look good and young and people want to stay fit.
Yeah.
And somewhere, I think there's a realization that staying fit, staying healthy is not only does happiness, that it also leads to far more wealth and quality of life.
Sure.
And I think that is, and as I said, with the way urbanization is happening and also today, the way, you have access to information, because of thanks to internet and everything, I think there's a far more higher consciousness that, and if you look at, I think it's not that people are not indulging. I think people are indulging, but people are also getting much more measured today.
Got it.
If you look at the way today fitness or gyms or, I think there is a trend to me. And therefore wellness, and maybe 10 years ago, people believed in destiny. Today, I think people believe that I can influence a better quality of life or health.
Right. But when you say wellness, like for instance, the current trend for people, of course, the affluent or the top end of the pyramid is like also Botox or, is that an area which is becoming increasingly popular because of the celebrity culture being thrown onto us via Instagram and other social media? Is that an area you're looking at? No, not
I think we are clearly on basic health.
Okay.
See, at the end of the day, what we are saying is that obviously there is a zone between somebody completely fit and somebody who is going into medicines. There is always a zone to say that I will ensure that I don't cross over there.
Okay.
And that's the kind of that's the kind of consumer who is into actually. And I guess earlier days it was just be a multivitamin or something. It started at omega-3, but today I think today people are willing to look at. I think sleep is a big thing tomorrow. It's in the next 5 years. I think sleep, stress will become a big thing. And I said gut health is becoming a big thing. Bone health is becoming. So I think there's a lot of play available in that. Food again, interesting play available. Like one is of course healthy foods. Food is a far more broad spectrum. If you look at today, food penetration is pretty single digits. So that's another area. So will our journey in digital, Is it over? It's not. We continue to look out for things, and we will continue to do that. But because we have a proven model today.
But when you're scouting now, what are you looking for? Because you've made a thing that apart from companies you're scouting, you're also looking at the entrepreneur, right? You're investing in the founder as well. What are these key qualities a founder should have, according to you?
I think firstly, I said that there's a mindset of building to last.
But how will we know that?
I think we now know in terms of how the business is run. I think, is it a sustainable business? As I said, that the foundation, I think the foundation of the business should be based on something which is, and therefore we don't like, as I said, spray or pray. We don't like what I call it's, as you know, in India, it's very easy to distribute in GT for 1 year and show sales. So what we look at is the sustainability of the brand. Is the brand as an equity? I mean, a simple thing. I mean, if I am in a category and a simple thing like an Amazon or a Flipkart ratings can give you an idea of consistency of ratings, product quality. There enough today, areas to look at in terms of you can listen to the consumer. There's enough data to be around in the environment to do that. We also look at product quality, the kind of talent is the person invested in, a little bit of next level. It just can't be the founders and only them. So we have right now, if you call it a kind of an algo to evaluate, is this business. Now, will we get it right all the time? No, there could be surprises. But the chances of us getting it right is much more than what it was in 2020 maybe.
Just pivoting back to traditional, I just want to check with you, in the last 5 years, because of the play of quick commerce, e-commerce, GT also coexisting, what is that ecosystem looking like? Is GT actually becoming sluggish?
So I think what's important is to define a role for each of the channels. I think GT is something which is here to stay, especially in small towns and rural. It's unlikely that India will see a complete takeover of organized trade as it was, it has happened in maybe some parts of Southeast Asia, Western Europe or US. I think you must realize that in India it provides employment to a huge set of people. Number two, I think the entire rural distribution, and therefore that's why traditional legacy FMCG companies who have strong rural distribution, they will continue to enjoy kind of sustainable competitive advantage. Yes, in the organized trade anybody can get in, but of course it has to be a strong brand, great product. But I think that entry barriers have lessened, but it will continue to be there in GT. We see the role of organized trade, at least us, as driving premiumization and diversification. If I sell the same SKUs or the same brands and the same mix in organized trade, obviously I'm doing cannibalization. And there's no point discounting something and trying to sell, because that is, so therefore we see for example, right now there's a huge explosive growth in quick commerce. Now the quick commerce shopper is completely different from the shopper in a modern trade or sometimes a shopper in a marketplace. Sometimes a lot of sale that's coming in is a top-up Kirana store sale that's coming in quick commerce. So we need to identify the shopper in each of the channel, design a portfolio which is significantly, I would say, exclusive and not with you can't have you will have overlaps, but how do you avoid that overlap? For example, if I have to make, I will drive far more small packs in GT. Large packs, which are consumption packs, I will drive in MT. I will create a different portfolio, for example, which is slightly more impulse and convenience on quick commerce. So I think we need to, and then it can be an growth and not growth at the cost of another.
But how are these channels doing independently? Like you said, MT, modern trade. Does anybody actually go to the mall anymore, super mall, and buy for the month? Are people still doing that?
Yes, I mean, if you really look at all the festive day sale, that's why I said, there is a certain shopper which buys huge quantities in a festival day. He or she might not go to quick commerce to buy it. Sure. So therefore you need to have a nuanced shopper understanding and have a tailor-made portfolio that drives each channel.
But Saugata, even if I look at myself as a consumer, right? I've become a very, very smart bargain hunter kind of consumer, because I am looking at what price the Kirana is giving me, because he's also quite smart. He's got WhatsApp. He's sending it home. I am looking at the Zeptos and the Blinkits of the world. Each one on a different day is giving me a better deal. right? Then there is Amazon, which gives you the best deal because they're packaging and they're doing, you know, they're not doing only me, and so they're doing a group. So I am deciding where to shop depending on, of course, it's an immediate need. I need dahi now, it's a different matter. But I'm saying if I have that even one day playing time, I'm looking at the best deal. Even on quick commerce, I'm looking at all of them and checking where I'm getting the best deal. So when you talked about discounts, they are majorly discounting versus a GT. Any product I look at a quick commerce, they're giving me a better price than MRP. My question is, how, for you, let's a company, have you seen significant growth? Like, what is the split now between GT, quick commerce, you know, MT and you know,
so obviously,
e-commerce?
Organized trade is growing significantly, okay. But our mix is different. For example, we sell a lot of our new portfolio foods completely through organized trade.
Yeah, okay.
So what we are doing is we are using that as a prototype or a test market. So we're using that organized trade. As I said, if I only sell Parachute, coconut oil and Saffola through that, then it will be cannibalistic sale. But for example, if I look at the kind of...
How does it matter to you where it gets sold?
No, that is because at the end of the day, it's the same reason that if it is offered at the same pack at a significantly higher discount, I am somehow not taking care of the needs of the GT. It is extremely important, as I said, that the Kirana ecosystem and the general trade ecosystem employs hundreds and lakhs of people.
But Saugata, that's a social view.
No, not a social view. I'll tell you that it's a viability of the distribution.
Okay.
It has to be long term, as I said, that rural or the small town consumer will not be able to get Zepto.
Correct.
Or any of these quick commerce today. So we have to have that system viable. No? It is in our interest to keep that system viable, because India is a far more large country. So if it had been a very small composite country, I can still understand.
Sure.
And if you look at the diversity of income, the diversity of even the kind of consumer preferences, it is important to keep a viable GT system around. It's not a social thing. There is a social angle definitely to it, but more than social angle, I strongly believe that in India it will be an and growth.
But are they currently suffering?
Urban, yes.
Urban, yeah.
But I see even you must realize that the Indian retailer and the Indian small businessmen, they are very smart. Sure. They're far smarter than anyone else in the world, okay? And they will find this one system. So I see some of the changes that's happening. Like for example, if you look at it, we are continuously reducing stocks. We are investing together, partnering, investing in tech. How do you reduce the cost and improve the viability of that system? Today, a lot of small Kirana shops have moved to open format. They're investing in tech, they're investing in air conditioning. So I think it's going to change. Yes, if I take the top 6 towns, obviously there is a little bit of a stress, but India is so big.
Is that what Project Setu is about?
Yeah, so Project Setu is about, I think if I look at our total reach as a percentage of direct reach, I think our ratio was far higher, which means our direct reach was lower. And we wanted to improve the direct reach in rural. Direct reach is always much better than depending on wholesale. And it also drives range selling. The other thing Project Setu is going to we envisage is for urban. If you look at our portfolio, our old core portfolio was essentially catering to mostly grocery and kirana stores. If you look at a new portfolio where we were under indexed was essentially in chemist, cosmetic and your food outlets. Like, if you go to the south, you see a lot of these bakery outlets or milk booths. Now, they stock food, they don't stock, other oils, they don't stock personal care. So those are the kind of outlets we want to expand in. So if I look at it, our exit number was 1 million outlets, a total which was 5.5. A lot of companies, that ratio of 5.5 was 3.54. So we intend to move that over the next 3 years from 1 million outlet to 1.5 million direct reach. And you are right that as we face some headwinds at the top end, this is about actually securing higher growths in semi-urban and rural over the next 5 years. And within urban, do I have a portfolio of outlets that caters to a diversification? Because the other issue, as I said, that in most of our new products, which we have the diversified portfolio, we are too dependent on modern trade or in e-commerce or quick commerce. How do I I mean, some of the categories, for example, I mean, if you look at muesli, look at snacks, look at honey and all, we have very great shares in organized trade. We have very low shares right now in GT. But how do I set them up for success? Because once we do that, that's how scale happens. In food, scale is extremely important.
Got it. That's the other thing. I just wanted to ask you also about, from let's say an industry leader point of view for FMCG per se, traditional model, what in your view will be the leading issues for FMCG companies, or something they need to address as we kind of approach the new fiscal?
I think growth. First thing is growth. Innovation is important. Cost management and value creation.
Innovation in what?
See, if you really ask me, I think any FMCG company, how do you increase the innovation percentage? So as you see, I think sometimes what happens is volume growth becomes much more important. If you are too focused only on bottom line, sometimes long-term volume growth and equity suffers. Like, I get disturbed when some people say that, ATL monies are cut to manage short-term margins.
Yeah.
We believe in not doing that, because long-term equity is important. The last thing is, I think, if you look at historically, the best talent used to come to FMCG. I think in the last couple of years, or even otherwise, there are a lot more options, whether it's startups, other techs. I think FMCG creates, in terms of the management trainee system of traditional FMCG company, produces the best of the managers. And I think we should be, and today, if you look at startups, there are some places, some people have gone there, some people have adjusted well, some people don't like the culture, some people have gone to organizations, not done well. So we are encouraging some of them to come back, and they are the best set of talent, because they are trained in FMCG traditional processes. They have experienced the fast life and a different agility of a startup, and when they come back, actually they are, and therefore I think FMCG should start getting back, or a homecoming as we call it, for a lot of talent which we have lost perhaps between 20 and 24. It's slowing down now, but I think we've lost a lot of talent to startups, and I think talent makes a long-term difference to any organization.
Okay, fair enough. I want to talk to you a little bit about your international business. International business also, you're doing very well. You've got a different portfolio in some of your countries which are catering to those markets. You've kind of reduced your dependency on Bangladesh. You're trying that as we speak. But what are the new markets we're looking at from the Marico stable in terms of international business?
See, we have 4-5 hubs. First of all, I think Bangladesh, while we are reducing dependence, it continues to grow well and double digits. We are extremely resilient there, and we believe in there is long-term opportunity that continues there. Having said that, obviously we want to aggressively reduce the dependence. Okay. The second hub in Southeast Asia, we have a strong business in Vietnam, and we have some presence in Malaysia and some other countries. And I think again, we always believe in saying that in a country where you have scale, can you build more scale? Because we have management bandwidth to expand. The third is Middle East and North Africa, where the most exciting growth is coming, because we were challengers. We were not in, like Egypt is a large hair oil market. 2 years ago, we were not in hair oils. We've just entered hair oils, and we are doing well. We have entered shampoos. We have just entered recently shower gels in Middle East. So in Middle East, we now have a full-fledged, just like in Vietnam, we are a full-fledged personal care company. So I think that is significant headroom for growth, and Middle East as a market in terms of economic growth, in terms of consumption, is done well. The fourth is of course South Africa and some parts of Africa. Africa, we are being a little choosy because we believe it's difficult. We are not, we are very, very capital efficient. We don't want to invest significantly in Africa. And lastly, we are actually looking at some other developed markets like US. We have started investing behind through, mostly through e-commerce, but there's also a significant diaspora out there who are still wanting to use Indian brands. Yeah. So I think these are the 5 hubs. We are extremely confident of continue to deliver constant double-digit constant currency growth. We are less, I think I would say, adventurous. We have not gone into LATAM.
But despite that, it's about 26 to 30% your contribution.
Yeah, that's fine. But as I said, that we are extremely lucky that our home market is also invest to grow market. In a lot of cases for multinational, Western multinationals, their home markets are stagnant. There's no reason why we should not be able to deliver double-digit growth in India if we continue to do our act right. So I think there's enough opportunities. And as I said, that ours is a very, very profitable international business. We make 20% plus EBITDA. It's very, very capital efficient, and we have been extremely disciplined. We have been largely organic. We have done inorganic, but largely organic.
Sure. Well, on that note, Saugata, I know you have a very tight schedule. Thank you so much for taking time and giving me these insights. And more power to you and, of course, the Marico brand as you push forward in terms of diversification, experimentation, and, of course, pushing the agenda for traditional growth, for traditional FMCG and its growth as well. Thank you so much.
Thank you.
Thank you.